I will be combining exercises 8-5 and 8-7 in Wiley Plus for this video. First, we're going to look at 8-5, and I've brought it up temporarily to show how the work is going to be laid out here in Excel, and then we'll transfer it over and to show where the journal entries go, when we can actually look at Wiley Plus and then do only Wiley Plus looking at it for 8-7. So for the first one, we have a beginning. It tells us a beginning credit balance of $19,800 in our allowance for doubtful accounts. So I went ahead and put that in to start us off. Now it tells me during 2017, our company wrote off accounts totaling $11,800. Now, it doesn't tell us our beginning AR balance. So we obviously have some kind of a balance here. Maybe it's in like $100,000. We don't know, but it's going to be something kind of high, especially if we write off $11,800 in our client's bill. Now, this $11,800 goes to individual client accounts. So if we have a client named Tom and a client named Susie, each one of their accounts will be specifically written off and then totaled up into one big AR account here. Now, with this $19,800 beginning balance that I have, I've already shown that as being uncollected. I just didn't know who was going to be uncollected. So now I know who it is. Even though they don't tell me, we can go ahead and do the journal entry. So instead of calling this again bad debt, I already did that last year when I had this original $19,800. So this is an unknown account. I know people aren't going to pay me, I just don't know who. It's telling us now that I actually wrote off individual accounts. So I know exactly who they are. And $11,800, I know exactly that those people aren't going to pay me, and I'm going to take it right off of their books individually. So that would be my journal entry for this one. I would have a debit. I'm going to abbreviate here, allowance for doubtful accounts for $11,800, and I'm going to credit each individual's AR balance. And in Wiley Plus, we just make one big one here. But in reality, you would credit each individual person's balance. The second part now tells us, of that $11,800, somebody actually did come through and pay us. I wrote his account off knowing I probably wouldn't get the money, but lo and behold, they did pay me. So what I have to do is I have to reverse what I had previously written off. So what I have to do is just the opposite of what I did here. I need to very temporarily put back on $2,600 of AR for that individual client. Maybe it was Susie. Put it right back on her books and take it off of the allowance for doubtful accounts, because her amount is no longer uncollected. That amount needs to go back on to say, well, somebody else probably not going to pay me then if Susie did. So I want to pretend like that $2,600 never was included in this original $11,800. So I'm going to add it back in, just like I'm going to add it back in over here in my AR account. And then immediately I take it right back off again of my AR, because I actually did get the cash. They don't owe me the money. I got the money. So from the company's point of view, we asked what the company get. We got cash of $2,600. Then we asked the credit question, how did the business get the cash? They got it from, say, Susie's AR balance. So I take it right back off of Susie's account. She still owes $0. But luckily, I got the money instead of having to write it off. Now, finally, what they ask us is record this year's bad debt. So to do that, what I have to first have is a running total. Make that a whole line. We got to have a running total for my allowance for doubtful accounts. So that's what I'm going to do here. We'll take my beginning amount, subtract out the amount that I had written off to specific clients, add back in that one client. So I have a running balance right now before I add any new stuff of $10,600. And I need to briefly pull up the Wiley Plus to see what our new amount is. it tells me that our new amount for the year is, our new total should be $31,100. So down here, when I'm all said and done, $31,100 should be my new total. And I'm going to put another line here because that's a total. My allowance for doubtful accounts should be $31,100. Right now it's $10,600. So what I need to do is I need to show the journal entry that says there's more bad debt that I'm expecting to have, but I just don't know who yet. And all I want to do for this is just take the difference. I started with 10.6. What did I have to do to get up to 31.1? I need to add in 20,500 as new estimated bad debt. So this is my actual expense item coming in at 31,100. And that's how you would do this journal entry. I'm going to briefly pull up at this point to show how the actual exercise is laid out. And here we go. So all I've done is I did these 4 journal entries just as they show here. Now moving over to exercise 8-7, this will be very brief. There isn't a whole lot on this one, but I did want to introduce a little bit of a new topic where there's a finance charge. So what, in a nutshell, what's happening here is this appliance store has a whole bunch of money getting ready to come in, we hope, but we're cash hungry. We need the cash right now, and we're willing to take a hit to get that cash. So we have all this money on our account receivable. We are willing to sell it at a fee to this other company, this factors company, in exchange to get that cash right now so I can start buying more inventory possibly, or more supplies, or whatever it is I need, because I need the money. So on March 3rd, I'm going to show cash coming in, but not of the full amount. It's going to be the 726, and I'm going to pull up a calculator. You won't be able to see it, but you can do this off on the side of yours as well. Take the 726,300, multiply it by, if there's a 1% charge, that means 99% of it's going to come actually to me. So when I calculate how much cash I'm going to be getting, it'd be $719,037. I'm going to skip a line for just a second. And I'm going to come down here and show where the cash came from. It came from my account receivables. My account receivables, though, are completely wiped off. I sold everything, even though I got just a little bit less. Well, that amount less, if you're ever unsure, you think, well, I know what it kind of should be, always pull up this list of accounts. This should help you. As you look down, we're going to look for hopefully some type of an expense, because this is money that I'm not getting back, but I am getting a benefit. I'm getting the benefit of having upfront cash. Now, this is not my customers not paying me, so it's not a bad debt. Let's see, we keep going down. Let's find another expense. It's definitely not a maintenance or repair. It's other operating. We're probably going to have something more specific than that. And we keep going down. Service charge expense. That sounds like what this would be. So I'm going to put in here a service charge expense, and it's going to be for that difference here. And let's quickly calculate what that is. $7,263 is how much I was willing to give up to get the amount of cash that I got right away. Okay, that will end our 2 Wiley Plus for this example. Hopefully you have watched our previous lectures on how to do a bank rec, and we will be back for week 10 next week.